You just do this time and time and time again. Super repetitive. It does not have to be exciting. It actually shouldn't be exciting. The best quality you can have as a trader is the ability to adapt, right? When you're trying to enter a trade, you're looking for multiple things lining up at a price point. Welcome. This is probably my most requested video, and it's going to be very useful. Basically, what I'm going to be doing is showing everybody how I find the stocks that I want to trade, how I open those positions using technicals, how I manage my risk during those positions, and how I exit those trades from start to finish. Basically, I'm a swing trader, and I would kind of classify myself as a reversal swing trader, which means I'm looking for something that's been going down in price, and I'm looking for indicators which show that it can go back up in price. But before I really get into the whole entire video, I'm kind of assuming that you already watched my free trading course, because I'm going to be talking about a lot of technicals and risk management factors that were gone over in that course. If you have not yet, I would probably say watch that first. The link to that will be in the description, and it's also available on freetradingmovement.com. But yeah, watch that course first. After you've done that, I'm gonna head on over to tools, and we're pretty much gonna be talking about how I find the stocks. Before, these charts just don't magically appear with all the factors I'm looking for, but what do I use to find them? And really what I'm aiming to do in this whole entire free trading movement is to teach people how to do this for themselves. Yes, I provide the trade setups, but I want you to be able to find these trades and execute these trades by yourself. So the first way to find these stocks, and I do find a lot of the stocks I trade through the stream and people requesting tickers in the chat. But before that, and even still, sometimes the best way to find stocks is by using scanners. There's Yahoo Finance, there's Finviz, and then there's TradeAddicts. I think that this program I've been using about for a month. I think it has everything you're looking for in depth. So I'm gonna head on over to that, and I'm pretty much gonna show you how to use the platform. The link for this will also be in the description, and it's on freetradingmovement.com. So basically, this platform has everything you're looking for, from automated charts to scanners to options flow to bots, pretty much all of it. So you could just see little, what the market is looking like. You also want to be looking at the news, potential catalysts in the macro. But, you can also use their automatic charts that they create as well. So there's a lot of stuff to work with here. You can even see options flow if you're an options trader, or just if you want to know if if a specific chart or a stock is providing some deep options flow, which means people are betting that something is going to be happening to the price, whether good or bad. So you can see all of this, and then really you can also go down to the scanners. I currently have been using Scanny, and basically, before you even look for charts and stuff like this, you can select potential indicators to find on those charts. So let's just try out the MACD, which is something I use on a lot of trades. We're going to talk about in a second. Let's look for something that's in a strong downtrend. As I said, I'm a reversal swing trader. And then basically you just look through all these stocks, bring them over to TradingView or whatever charting platform you use, and then look for the signs that you want to see when you're putting on a trade. So let's head on over to TradingView. All right, so now we're on TradingView, and I'm pretty much just going to be showing two examples of trades that I've already put out that were great trades, and explaining how I made my theses on these trades and looked for the things that could, provide me and other people money. So the two trades are X and VRM. If you've been around for a while, you know how great these two trades were. And yeah, so you've used your scanner, you've somehow got into a chart in which you think has potential, and now you're really trying to look for things and line other things up. So this is just X, and we're looking at this chart, and the first thing you notice is that the price is going down. It could be creating some sort of pattern. So let's zoom out a little bit. It has a very nice uptrend, and then it started pulling back. So what could that be? As you probably saw in the course, a bull flag. So let's create this bull flag, and I'm really not trying to show what happened after the trade, so I'm not showing that part of the screen yet. So we're going to pull out the parallel channel tool and just create this downsloping channel after run up, which is a bull flag. There you go. That is your bull flag. So you have one factor on the chart, right? When you're trying to enter a trade, you're looking for multiple things lining up at a price point. That's what you want your entry to be. You want to have divergence, a pattern, candles that are bullish, moving averages, Bollinger Bands, VWAP, whatever it is that you use. The more things you can have lining up, it just increases the probability of the trade playing out. So I'm looking for a swing trade. I'm looking at the 4-hour and the daily time frames, and I'm looking for as many things to be lining up from a technical standpoint on the chart. So in the 4-hour, you already see that you have a bull flag. Now, if we look down at our MACD, you can see that there's some hidden bullish divergence, which means the price made a higher low from over here to up here, but the MACD made a lower low. So we're going to show that hidden bullish divergence on the 4-hour. Now we're going to move over to the daily and see if we can get any more help from the daily. As we see over here, you had some hidden bullish divergence developing right over here. So we're going to chart that as well. So now you have a bull flag, hidden bullish divergence on the 4-hour and the daily. Let me just clear that up. Let's go back to the 4-hour and see if we can find even more. Let's scroll back. As you can see, there's a support right here, but if we go up a little bit, there's a support down here at around $16. So there's your support at around 16. Let's come back in here. And this right here was the entry of the trade. You had a bull flag, you had divergence on the 4-hour and the daily, and you added support. So you had pretty much 4 things lining up. And you can take trades off of one thing, but the probability is just lower, and you really need to be careful on how you manage your risk on those types of trades. But what you're really looking for is trades that provide multiple variables. I would say the most common thing I look for is simply just support and divergence, but you also definitely want to try your best to look for patterns as well, right? You want to be trading off of patterns if you're a swing trader. But as we've seen, in a super bullish market, sometimes all you need is support and divergence, and we have had great trades off of those 2 things alone. But like as I said before, when the market conditions are not as bullish, you're going to need much, much more to bring to the table for a trade to be playing out most of the time. So now you see right over here when we were entering the trade, you had a support, you have divergence, bull flag, and you're looking for that breakout. So this is what happened after the trade. It was great. And I'm pretty much trying to replicate how I made that trade. It actually did pass the target of the trade. But the thing is, when you're managing your risk, most of the time, and if you're a swing trader, you want to get in, you want to take your profits, and you want to get out. A common thing I say is that if you don't take your profits, the market will take them for you, which is the case a lot of the time. And you're not investing here, you're trading, right? You're not trying to hold this for multiple years. You're trying to get your profit and you're trying to move on to the next one. So when you're managing your risk, you want to be, looking for that area with the multiple factors lining up at. You want to see the price point in which those factors are lining up at. So I'm pulling out my long position tool, and pretty much the price was right around here when I put out the trade. It had already bounced off the support. So pretty much with the divergence, you were pretty much, I'm saying pretty much a lot, I don't know why. You were betting that it could break out right here, right? So you're entering the trade right there. Now, how do you manage your risk if you're entering? I think the entry was right around $16. So let me just bring that down a little bit. I think right there was the entry approximately. How do you manage your risk, right? You want that stop loss to be somewhat under your support. You don't want it to be too far in which you could potentially lose more than you anticipate, but you definitely don't want it on the support. So we're just going to bring that up and keep it, a couple percent under that support, just so in case it does fall back down to that support and bounce up, you're not going to get stop hunted. So there's your stop loss. You're risking 5% on the trade. Now, where could you target? Well, if we look right here at the top of the flag, we could just draw a line at $20. And let's scroll back and look in history if there was other price action at that area. As you see right here, 20 was once your support in January of 2019. It was your support here. It was your resistance right here. Right, I'm trying to scroll even further back, right over here as well, and it was your support here. So you've had multiple price pivots at that point, which just makes it a stronger ice line. And that's just another term I've learned from Mitch Ray. If you want to check him out on YouTube, go for it. So I need to scroll a lot back. But yeah, you're looking in the past, right? You're going to be scrolling to the left on your chart, and you're looking for previous times in which the price reacted to a level, which can create you a support or a resistance. So at this point, it was your resistance. So that was pretty much the target of the trade. And there you go. This was the X trade. The entry was down here. It broke out. It hit the target, and it even ran more. So that's just a great trade right there. You had multiple variables lining up at the entry right over here at 16. It broke out. The divergence played out, and it went well. Now, what's the case when the trade is not going out as you planned, right? Let's say you enter the trade and immediately it's just going down and is approaching your stop loss. What do? First of all, you don't freak out ever. There should really not be emotions in trading. If you mess up, that's completely fine. You just find the next one, because really it's just a game of probability. And if every single trade you're giving yourself a chance to make more than you're risking on the trade, over time you won't have to win all of your trades, right? You don't need to be a perfect trader. You just need to understand that you want to always be setting yourself up to potentially gain more than you're risking. That is reward to risk. On this trade, there was a 4 reward to risk, which means you were potentially trying to gain 4 times more than you were risking percent-wise on the trade. So that is X. let's say it is going down towards that stop loss, you could lower your stop loss if you think that the technicals still look fine. If the technicals did get damaged on the drawdown in price, maybe you just want to exit and move on, right? You have to always remember, yes, you want to be setting up your entry, your stop loss, and your target before you even enter the trade. But you need to be able to compromise, because a lot of the times it might not get to your exact target. It might stop you out immediately, but you want to keep on looking at the technicals. See, maybe even if the price is going down towards your stop, the technicals are still looking like there could be a reversal soon, in which instead of stopping yourself out of the trade, you could maybe double your position or cost average at that price point. So there's a lot of things you can do. Even up here, it broke this resistance right after you taking some profit. So you could have left half of your bag on the table, in which you took half your profits at the actual original target, and then you were leaving some for the upside. So you don't have to completely follow your entry, stop loss, and target. You want to be able to understand that the best quality you can have as a trader is the ability to adapt. And you don't need to, you never signed a contract saying, okay, this is where I 100% need to enter. If it falls down to this price, this is where I need to exit. And if it gets to my target, this is where I need to sell. No, you can change that up as the trade goes on, as the market changes, as the days go by. Just take it day by day when you are swing trading, because anything can change. Your targets can change. You could double down your position. You could cut some off of your position. You could stop out some of your position, whatever, however you want to call it. Just always be ready to adapt. So that is X. Let's move on to VRM, which was another great trade. And VRM, the entry of the trade was around like down here. As I said, I'm a reversal swing trader, and this thing was really getting crushed. As you can see, it went from like $75 down to like $30. So I was looking for finally a place where the price could be reversing, and that was right here. As you can see, I was looking for multiple variables on my chart. What's the first thing you see? There's a strong support here at $33. So you kind of had a double bottom as well in terms of a pattern. You had the strong support already where the price, there was more demand at 33 than there was supply. People wanted to be buying it at 33. So you see that there's this area where the price made a lower low on the price, and you created classic bullish divergence on the 4-hour. So from this MACD island to the next one, you went up, but on your price from this low to the next one, you went down. That's classic bullish divergence. It's showing that sellers are being exhausted and that the price could be headed to the upside soon, which you see right here. Now, you want to find even more variables. So let's not the week, let's go to the daily. And let me take this off the chart. So now you're looking at the daily, and what do you see here? There is triple classic bullish divergence, where the price has been going down, but on 3 MACD islands, you made a high low. So I'm going to draw that out just so you can see. And there you go. That is your triple classic bullish divergence. As the price went down, the MACD went up. Divergence is something I use on 95% of my trades, in which the oscillators and the price are doing the opposite thing. So there's your divergence. There's your support. And if you want to chart the double bottom, go for it, but that was pretty much your double bottom. Now, how do you manage your risk on this trade, right? So the entry was right after you bounced off of that. You got, confirmation that there was a major support right there, and you're trying to enter your trade. I think the entry was around like right here. So the stop loss was down there right under your support. Remember, you don't want the stop loss right on the support. And then the target was just this swing high right here. So a swing high pretty much just means the last place in which the price went up to before falling back down majorly. So you're using your previous swing high as a resistance, and if we look left, we're looking at past points in the chart. It was once your support in July and kind of your support in September. So you had multiple things lining up at that price point in which that would be your target. As you can see, you have about a 3 reward to risk. As Mitch Ray would say, that's the minimum reward to risk you want on every trade. And there you go. Your entry was right here at 35. If it ever fell back down to like $32, you would be stopping yourself out of the trade. But the target was $43, as it was a resistance and a previous support. And that's where you took profits for a 22% gain. As a recap, you're looking at scanners across the market to get a feel of how things are looking, which sectors are hot, what stocks you should be looking at. After you do that, you're moving on to the charts and you're looking for multiple things to be lining up at a price point, which was right here on VRM and which was right here on X, right? Then you enter your trade after noticing all the variables on the chart. You set up where you want to be taking profits, where you want to have your stop loss. And if it goes to your targets, great. You take most of your profits. You could leave a little bit left on the table, if the price continues going up. If you get stopped out, you get stopped out and you move on. You just do this time and time and time again. Super repetitive. It does not have to be exciting. It actually shouldn't be exciting. It should just be boring. You know what I'm saying? Like, you really just want to take these profits, compound them, and then do that every single day in the market as long as the conditions are bullish. So that's pretty much the whole entire process. Just like another great trade from Guy and Hat, where really a lot of things lined up, was ABC. You had the divergence, right? Divergence on the 4-hour and the daily at a support with the pattern. On this chart too, you had the 200-day moving average. And if we really show the Bollinger Bands, which I don't use too often, but for people that do, let me X this out, take off maybe that. You also had the lower Bollinger Band right over here, right at the entry. So it was at this major support. It had a Bollinger Band, the 200-day moving average, divergence, a flag, and that's pretty much what led to a great trade. So you're looking for multiple things to be lining up at a price point when you're entering. You're looking for multiple things to be lining up at a target when you're selling. And you're looking for a couple percent under a support for your stop loss. Do this time and time again, and you should be able to make money. So I hope you enjoyed the video. I feel like it helped. Let me know if it did in the comments. Hit the like button, hit that subscribe button, and I will see you in my next stream at 9 EST every single weeknight. Peace out.